everybody, welcome to episode 1 of Two Takes. I'm your host, Chad Riedlinger, and I'm joined today by
Howard Vernick.
Thank you guys for joining us. So in Two Takes, we're going to discuss the top industry news in the mortgage and real estate industries.
So our first topic is the rate outlook. Where are interest rates now and where are they going to be going in the future? So we just came off some of the lowest rates ever in history, and they've ticked up a little, and I think people are getting nervous that they're going to keep on going up because the economic outlook looks like it's getting better and better. From what I hear in the industry, we're very close to a recession. So in 2020, certainly by 2021, we'll have recessionary times, and that's going to mean that rates will drop again. That'll not only make it better for people to refinance, but also people purchasing homes will have more purchasing power just because they'll be paying lower interest rates.
I feel like, me personally, I feel like we're already kind of 1 foot in the grave, so to speak, as far as the recession goes. I know that we right now we are in one of the best times as far as the unemployment rates go, as far as how low they are, and I know that that's always been a key indicator that when unemployment rates are at their lowest, that usually that indicates it's followed by a recession.
Well, that plus the yield curves has flipped. So the short-term rates are getting better than the long-term, or they're at least equal, and that's another recessionary indicator. So I think we're going to have a long time now of some lower rates, which is going to be good for everybody buying homes and everybody refinancing homes. Not so much good for the people who are going to lose their jobs, unfortunately, and businesses that are going to have to scale back.
So I know that most people, when they hear recession, they think everything bad in the economy, but that usually is a good thing as far as mortgage rates staying low and actually keeps the home prices either at least where they're at or increasing because people can continue to afford the homes that they want.
No, these are definitely golden times for us in the mortgage business.
All right, so next up we got refinance opportunities. So looks like rates are going to continue to stay low, and that means that we have a lot of refi opportunities. And we've been in a refi market already, and so loan officers have been super busy with refinances. And normally during those times, I think it kind of lulls them to sleep that they're not going after the realtors like they should.
No, on top of that, they're not going after realtors, and it leaves opportunities to be able to get new real estate relationships. But I have to say, this is the time to go after it because we don't often have rates this low with this kind of dip. So this is your time to make money. You should be working double time right now.
Absolutely. I get nervous a little bit watching loan officers because I know they're busy, their pipelines are full, they don't have time to prospect, and the thing that makes me a little bit nervous is that sometimes it gives them a false sense of security that their business is good, when in fact it's good because of the refinances. It's just propped up because of that. But when the dust settles, they're going to be left with where's the realtors and where you've been all my life. The realtors are going to be looking at them saying, I haven't heard from you in a while.
Right. No, they get hurt, and they're going to stick with the people who stick with them. So when you have realtors that you haven't been able to make appointments with because they have somebody else, know that other person is going to have a good amount of refi business, and they could be gone in a minute where they're not answering their phone, they're sitting at their desk all day, they're too busy for them, and then rates tick up a little, the refinances are gone, and some loan officers are going to have to restart their entire business.
Absolutely.
So I think we've all now heard about the iBuyer companies where they're literally buying homes and letting people either stay there for a while or move out right away, and they'll have the money in hand to go buy their next house. It's so convenient and great for the millennials right now because they want things now and they want it convenient and made easy. So the iBuyers are going to definitely make a dent into the real estate community, and the realtors that are out there that are not using these methods have to keep their eyes open and get with the program.
I haven't really seen a big response from NAR or from the realtors to combat this message. So I saw some of the commercials for the iBuyers, and they are preying on their whole value proposition is we make it so fast and so easy but what does convenience cost you? And so what I've been seeing out there is that they're putting offers, these iBuyer companies are putting offers at 70 to 80% of the value of the property, not to mention 8 to 10% fees or commissions associated. So they're sitting here like hitting the realtor, they're basically attacking the realtor saying, don't pay 6% commission, but then they have 8 to 10% fees built in, and that's after their offer they're giving them is 70 to 80% of the value of their home.
But they make it easy. And they're also being backed by big money. So right now there might be that bigger spread because they're afraid. But I think as they do their numbers, that spread will get smaller and smaller. So I think that realtors, they really have to know their customer, their seller, and if it's really the best thing for them, that they're willing to take less money to make an easy, fast transaction, then they got to move in that direction. If not, they have to show them what's costing them.
Right.
And many people say, I'd rather keep the money than have the convenience.
So I always kind of think about things in terms of my parents when this stuff like this happens, and they would have no clue if it wasn't for me what their home is even worth. So I think there's a lot of sellers out there that could really be taken for a ride, not knowing they're selling their home for 20% under market value. And I think that one thing people aren't talking about is there's a lot of realtors have cash buyers or investors that they can introduce those sellers to if timing is really the essence, and still get them a better price than going through iBuyers. So speaking of people not being educated, so iBuyers are preying on sellers not being educated on their values. And there was a recent article with Bankrate where they said over 50%, actually 51% of Americans are in the dark when it comes to what minimum down payment is required. So what are your thoughts on that number?
That's crazy, and I guess we don't know it because we're in the business. So we do 3% down payment deals all the time. We do 100% financing all the time. We even do the FHA with 3.5% down and the seller paying up to 6% toward buyer's closing costs. So it's educational for us to understand what's out there, and we really have to let the public know what's available.
So the article went on to further reference that 28% of the people surveyed thought that 20% down was required, and only 2% thought that it was between 0 and 5%. So all these low down payment options or down payment assistance options aren't being talked about enough. The article also went on to say like the millennial home buyers said the cost of their current living expenses are the biggest reason that they can't save up enough money to buy their homes.
That, and I'm sure their student loans.
Yeah, that's the next big domino to fall.
Right, but education's key. We have to let everybody know what's available to them. There are some down payment assistance programs out there. And it also leads into educating sellers who are dropping their prices so often that instead of dropping their price, if they pay toward buyers' closing costs, they'll get more buyers who can buy their house, and the buyers end up making out because they get in with less money, or they can use that money to pay lower interest rates.
That's a huge thing. So I think sometimes in a good seller's market, we forget because the sellers don't have to they don't have to lower their price, but in a buyer's market, that seller buy down could be huge, and it could, like you said, it could not be as big of a drop in the price, but actually benefit the buyer way more than that reduction in sales price, whatever.
And mortgage people and realtors are getting together now so that they can present this to sellers and show them what's really happening in their market. And it's a win for everybody.
Absolutely. So guys, thanks so much for joining us on our first episode. Please be sure to like and subscribe to our future videos. Make sure you comment below. Let us know your thoughts on these different topics we discussed, especially the iBuyers. Are you educating your referral partners, your customers, on the iBuyer situation? Because I can tell you right now, they're spending tons of money marketing to them. So if you don't put that information in front of them, they surely will.
We'll be looking for suggestions from you for other topics. And we just want to keep everybody informed and ourselves on top of our markets.
Have a great day, guys.